A long-awaited shift is finally underway in the real estate market. We are seeing headlines and we are seeing trends that indicate that inventory is building up slightly, that buyers are getting more leverage in the marketplace. Interest rates are, of course, up. So I wanted to show you exactly what we're seeing in the local Charlotte market, as I believe all real estate is very localized. A lot of the headlines you're seeing in the news are sensationalized headlines from vacation markets like Las Vegas, or from markets that have always been experiencing a decline for the last few years. Think of areas like the San Francisco Bay Area. They've seen net population declines consistently for the last few years. The very first markets that we usually see rumblings of a slowdown in are the vacation markets. So those are markets like the beach or Las Vegas. These are areas where folks typically buy vacation homes, they buy second homes. These are areas that they don't have to move. These are folks that take their money out of stock market gains or take bonus checks and things like that and plunk down and buy a second property. Those are typically the first markets that we notice slowdowns in. And for sure, we're seeing slowdowns in those markets. That's definitely the case. Markets like Charlotte, I believe overall are going to fare pretty well. We are a have to move to city. We are a corporate reload city. We are a job hub. We have low unemployment. I believe the Charlotte market will remain strong long-term, and I'm very bullish in the Charlotte market. So today I want to put your eyes on what we look at as real estate agents. Right now on my screen, you are seeing stats. This is the last 7 days of Canopy MLS. And for those of you that don't know, Canopy is our primary MLS provider. They cover a very large swath of geography. So looking here in Mecklenburg County, it's of course where Charlotte is, all the way out to Western North Carolina in the Asheville area and Buncombe County. Pretty much anywhere within an hour to an hour and a half of Charlotte is covered by Canopy and is included in these market stats. We're one of the largest MLSs in the state. So looking at our stats, we have seen that in the last 7 days, a little over 2,000 homes have hit the MLS. What we look for when we look at these stats are the sell-through rate, and this indicates kind of how fast things are going and what steps sellers are taking to get their properties under contract. So if we jump down from new listings to solds, we can see that 2,026 homes hit the market and 1,943 homes sold. Keep in mind with solds, there's a lag effect. So these solds very likely went under contract 30 or more days ago. So we're sort of looking rearward back at data. Where we can really begin to see early signs of a slowdown are in two data sets here. In the under contract homes, we can see that there's just at 1,900 homes went under contract in the last 7 days. Again, in line with the solds. Where we really see degradation in values is in the price decreased category. We see 1,369 homes receive price decreases in the last 7 days in our MLS. This is a record high. We have not seen price declines like this really for the last few years. We've seen one-off price declines, but sellers that have been trying to reach record levels are now having to be kind of reined back in. If you need to sell your home and if you want it sold in a relatively short time frame, the price has to be brought in line with comps. If the comps indicated, say, 600,000 a few months ago, we had sellers that would list for 620 or list for 630. That's no longer the case. We're now having to list in line with the comps or even take a slight reduction off of where the comps would indicate. So those are the two biggest trends that I'm keeping my eye on. If we continue to see precipitous price declines and decreases here, and we begin to still see decreases in under contract status properties, that's really going to indicate that we're in a longer term slowdown. But keep in mind, all this has really happened over the last few weeks for us in the Charlotte market. This has not been something that's been going on for multiple months. This has been a relatively quick slowdown, largely due in part to rising interest rates. The Fed taking rates now, we're in the low sixes for mortgage rates. That's had a pretty seismic impact on buyers, especially those who were financing their homes. Looking at some past historic kind of recessions and declines, let me move my face here. Looking at the 1980s, recessions, home prices continue to go up during both of those recessions. 1990s, the dot-com bubble of the early 2000s, we see price declines very infrequently. The 2008, of course, that's the one that everyone remembers. We did see very large price declines. That was a housing-led recession. This current shifting economy or situation that we're currently entering, I think, is not housing-led. So interested to see kind of where things lie. We'll keep you guys updated on stats that we see. And of course, all real estate is very localized. So contact your local agent to really get that feel for what's actually happening in the marketplace and make sure that they can speak to that in a manner that's effective and helpful.